Hey everyone. With the way things have been going lately, I think it's really important to do a lesson on this. And I've been caught in this many times before, and I've even been semi caught in this recently. So it is not something that is uncommon, but it is something that can be resolved. So I'm making this video because this is actually one of the most common questions I get. And I get it from a lot of people, not one, not two. So if you've asked me this question recently, this video is not only for you. This is something that is, again, this is probably my most common question. I get a lot of people send me their trades and be like, what am I doing wrong? Why am I taking hundreds of dollars of losses and small wins? Like, why am I trading small trade size and getting small wins, but my losses are eating all of my wins plus some and my account's bleeding down? Okay, that is super common. So there's a couple of reasons for this. One, so I'm just going to go over it a little bit in my head first before I go into the chart. This is just an example chart. One, it's one thing we do critically wrong, and statistically, this isn't something I'm making up. Statistically, it's actually worse than 9 out of 10 traders do not succeed. I did not succeed my first year. I did a lot of things right. I made a good amount of money, and I ended up giving it all away and finishing my first year $10,000 in the hole. It took me a lot of starting back small to restart it. If you don't know how to day trade successfully, day trading is not a career option as your main source of income right now. You can't say, I want to be a nurse and start nursing tomorrow while you're going to school and expect to get paid for it. I know this sounds dumb, but it really is that simple. If you're expecting to get paid starting now from something that you're learning the craft now, your expectations are unrealistic. I had the expectations. We all think we're going to make a boatload of money. You see the traders out there. They're on YouTube. They're on the internet. They're on TikTok. They're on whatever. Half of them, I would say 3/4 of them are full of shit. They just want you to get the clicks. You see on YouTube all the time, everybody's got a strategy. That one simple strategy has a super high win rate. You ever test them, they're full of shit. Most of them are. Now, excuse me being candid about this, but this is an important topic. My goal and Quad's goal, our goal number one is we want to make money. So we're both in this to make money. We both have steady incomes, but my plan, I'm already in the process of selling my businesses because trading to me is becoming the number one source of income. We're in this because we want to make money. We're finding, and I'm being honest with you, okay? We don't charge $100 a month because we're trying to make $100,000 a year off of the $100 a month subscriptions. That'll never happen. We just won't be there. We would have to have so many subscribers that are here all the time. We're not there. And I'm being honest. This is an actual honest moment. This was a tough month. Really, the entire month of November was tough. And then it's this week. There's been some stocks go from $5 to $500, and a few others go from $3 to $10 and $4 to $70. This happens all the time, and we're getting caught in some of them because the market is starting to light back up now. So, back on point, you're not going to make yourself a salary in your first month of learning how to day trade. You need to learn it. You need to have the time to do it. You need to have some income to support you or some savings or whatever it's going to be, and it's going to take you months. It's not going to be an overnight thing. Okay, 3 months is probably, if you really pay attention, you could do it. You're going to make mistakes, and that's part of the issue. And I have some guys in here that have made some good trades, made some good money, and then all of a sudden wondering how they gave half of it back so quickly. It all goes that fast. It goes out faster than it comes in, right? So I want to go through, for one, the mentality. Day trading is not a today, I'm going to make money tomorrow trading. For two, 9 out of 10 people fail because A, they go too big, too fast, trying to make that money right now. You can't. You're going to make mistakes. You are inhuman or stupid lucky if you don't make mistakes. You're going to make mistakes. You're going to run into scenarios you've never seen before. Sometimes the one stock that goes from $1.50 to $2 and you jump in it, and then in 15 minutes goes to $90, you're like, what the heck? I've never seen that before. You're going to have scenarios you've never seen before. You're going to try to put a stop loss in. It's going to give you an error. You're going to have to fumble to try to do it again. By that time, it's gone up $10. That's something you're going to face the first time. These are all challenges. There's always another challenge that you haven't seen yet. I still see some stuff I haven't seen yet, and I've been doing this since 2018. Okay, so one, you're not, day trading is not going to happen tomorrow. For two, you can't go too big too fast. You all want to make money right now. You can't. You won't. You're not going to. Just get that in your head. You're not going to. And if you expect to start making $1,000 a day by next week, this isn't the job for you, because you're not going to make decisions that are smart. The second part of mentality that is an absolute must is A, you can't be too proud to take a loss. You can't hope. That's a third. I'm going to skip that one for now. You can't be too proud to take a loss. Let it go a little farther. I don't want a loss. Let it go a little farther. I don't want a loss. This might turn around. All stocks that go up come down. I don't want a loss. You know what? Take the loss. Take the damn loss. That's the business. 1 or 2 out of every 10 trades is going to give you a loss. No matter how perfect your trade plan and your execution is, you're going to take losses. I can have perfect execution, perfect trade plans, perfect history, perfect everything for an entire week. I'm still going to get losses. And when I don't, you get fortunate. You get lucky that, those ones didn't come up on your scanner that day, or you didn't get it, or whatever the case is. I've gone 100 straight wins, but then I've taken losses. I've gone, on weeks where I've had more losses than wins. You got to go with what the market gives you. Okay. 3, hope. Hope is not a strategy. You cannot get into a trade and hope it turns around. You can't. You absolutely can't. So today I want to talk about stop losses. Okay. This is my biggest question. Was one of the biggest things I had to overcome, because I let trades go ridiculously against me and get $2,000, $3,000, $4,000 in the hole when I had like a $10,000 account, right? Half of my account in the hole, and waited for it to turn around, and it did, and it turned around, and I'd come out break even. And I'm like, see, I just got to wait it out. No, because that would be a trade that goes up from, my entry at $7, and maybe it goes to $13, $14, and eventually comes back down to break even. What happens on one of these trades, SMX for instance, who started yesterday at $60, they went all to 500 today. That hope, your account is empty. It's gone. You're gone. It's over. And at that point, you're going to be, day trading is not for me. Or even worse, you're going to be one of those people on the internet that says day trading is a scam. You can't make money doing this. Or your family's going to say, oh, it's so risky. You can't make money doing this. It is risky. It's risky because people don't want to learn. So you can't be so stubborn that you can't take a loss. Now, let's look at it from the other side, the more positive side. Okay? I used this example of somebody today. Somebody told me that, and I'm not picking on that person. It's just a great example, right? It's an example that hit home with me. It made me realize that I can use this as a lesson because I've been there, and I'm sure half of the people listening to this have been there. If you look back, I've had this experience. I guarantee you I've had this experience, and I've had it this year, right? If you look back and say, okay, my max stop loss should be X amount of my account, whatever it might be, 5%. Let's say you have a $10,000 account, then $500 should be your maximum stop loss. Am I right on that? Yeah. Okay. I just want to check my math, make sure it's not supposed to be like $50 because it's late in the day and I've really had a long day trading and I want to make sure I'm right. So let's just say 5%. Now 5%, I can grow my account 5% in one day. Happens quite often actually, but 2% a day, 3% a day, those happen really often, 1%. So if you lose 5% twice out of every 10, you're making money, you're growing. Okay, so 5%, let's say 5% is your max stop. Don't ever let it go past that. Now there's another common mistake. So let's just say I get in here at, let's let's just say, okay, I have a $10,000 account. Okay, I'm gonna do this live. There's my account. Now let's say 5% of that account is $500. That's how much I'm willing to lose. Okay. Let's say I determine, like today, my entry was $7 on WHLR. I've played this stock so many times it's not even funny. So I have some history with it. It's okay. But I still have to have a plan, right? Still need a plan. Hope or winging it makes you lose money more often than you make money. So let's just say $500. So if I enter at $7, okay, I need to determine where this thing is likely going to go, as far as it's likely going to go. Now, these things can go unlimited, okay? They can. They just can. TGL, right? Started today. I played this a bunch of times. Started today around 960, but it actually started around $7, 6 something, in the sixes. Okay, TGL went from $6 to 87. You know, you don't expect that. It's not going to happen. So you can't just look at a chart and be like, oh, well, this thing can go everywhere. I mean, where has it been before? Well, holy shit. Okay, this thing can go to $40. So I need to make a trade plan around $40. That's not realistic. Okay, you need to pick a realistic turnaround spot. So if I look at this, where is a realistic turnaround spot? There's a missed monthly pivot right here. Okay, that's at $8.11 or $8. Yeah, I think it's $8.11. Okay, so I've determined this is as far as this stock is more than likely going to go. There's not really anything else until it starts getting into like $16 or even maybe up here in the $13, $14 range. But right now, this is realistic. It is not uncommon for a stock to go to a missed monthly pivot and then reverse. I play these all the time, and you can go through my trade logs. I play them religiously. Okay, so this is not uncommon. This is in fact a trade I can't wait till it gets up here so I can play it. I hope it does. I will play it. So now I've determined that $8 is where the stock could go today. When it's starting to go up, you know, $5, $6, $7, it's pumping a 15% candle. It's coming up on our stock scanners. It's getting up to 30%. Okay, let's see at what point. So from the close yesterday, well, there's 75%, right? So this thing starts getting on our scanner at 40%. It closed at 15% in one candle. It was already at 85%. It starts pumping up, and I get in, this thing was up 120%. Okay, it's not unrealistic for this thing to go the rest of the way to $8. So what I do for a trade plan is to say, okay, if I'm going to get in at 7, there's $1 there that I could lose, plus I got to give it some space. Okay, so let's say I want to let it go to the missed monthly pivot, and then I'm going to give it maybe 7.5%, 8%. Let's say 8. Let's just oh, look at that, worked out. Let's just round it out at 8. So there's $8.76. Okay, so I'll go to $8.75. Okay, there's my stop loss. So $8.75 is how far I'm willing to let this thing go. I'm not going to hope it comes back if it goes beyond it. I've given it room here. This is as far as I want it to go. But I've given it some space in case it pushes up and does a wick and comes back down. I've given it some room. Okay? Stop loss set. Part of trade number 1. Important part of the trade. Determining your entry. Another important part of the trade. Now, from my entry at $7 to $8.75 is $1.75. I'm telling myself a proper trade plan gives me enough room that this thing could go $1.75 against me. So if my max stop loss is $500 divided by $1.75, that tells me the most shares I can take is 285. Simple math. Max stop loss divided by how far you can let this go that it makes sense on the chart. If you can't determine where it makes sense on the chart, that's the stuff I can teach you. Okay? Can't teach you the mentality. I can try, but you need to develop the mentality to say, I need to protect my account. If this thing goes to $40 and I'm hoping my account's gone, my trading career is over, I'm done, I left, right? Or I got to refund it, and then my spouse is mad at me because I'm putting more money into a trading account that I just lost, and she thinks I'm an idiot because, or whatever your story is, right? We all have a reason why we don't want to lose money. If we had unlimited income, we probably wouldn't be trying to learn this. I got a lot of income. I don't have unlimited income. I am in no position where I want to give away $5,000 or $10,000 2 or 3 times a year. Why would I do that? It's a small car. Why would I do that in a year? Who does that, right? We don't want to do that. We make mistakes. We lose some money. We don't want to do that. So if $1.75 is as far as I can go, then 285 shares is what I take. So I take my entry. That seems like a lot. 285 times $7. It's $1,700 on a $10,000 account. All right, so it's 17% of my entry of my account. Now, because I've determined my stop loss area first, I'm okay with that. So I take 10%. Okay, 10% of my account, which is $1,000. Maybe I only want to take $1,000, right? Divide that by the $7. Maybe I take 142 shares. Okay, 142 times 7 is $1,000. Maybe I only want to put 10% of my account in here. That's fine. That means I'm not even, if I stop this out, okay, if I take 142 shares and I lose $1.75, I'm out $250, which is actually half of my max stop loss. But I have a stop loss that makes sense. $250 is recoverable. If you get a $10,000 account, $250 is recoverable. You have a $5,000 account, $125 is recoverable. You're going to make that in a trade. It's just going to happen. It's pretty easy. But if you're trading and your wins are 20 or 30 or 40 bucks or 50 bucks, you can't take $500 or $600 losses. You're going to bleed your account dry really fast. Not just bleed it dry. You're going to bleed it dry really fast. So you need to start protecting your account. Okay? If you don't have an account tomorrow, you're done trading. So why wouldn't protecting your account be one of your main priorities? Stop worrying about your win-loss ratio. Okay? We can work on that. Start worrying about protecting your account. Set a trade plan that works, and then let it play itself out. If you're during daytime hours, set a range order. Here's your stop loss. Somewhere down here is your profit target. Right? Whatever it might be determined at the time you enter, maybe the current monthly pivot, or let's be a little bit more conservative. Let's say $4.25, well above the current monthly pivot, just in case it ticks you out. But if I go from $7 to $4.25, I made a boatload of money. Let's just say today, all right, I made twice. Okay, now I only took half the position here, and then I took another half here, and then ended up just canceling the rest of it out later at the end of the day. Okay, let's do some math on this. Let's look at a normal win. So $7 minus $5.20. I made $1.80 a share. Let's say I took, what was it, 140 shares? So $1,000 divided by 7, 142 shares. Okay, so bear with me here. I'm going to make this a little bit smaller so I can have both out. Okay, I'm trying to do this live so that you can just see it happen. This isn't pre-scripted. Okay, so we know my max stop loss is $1.75. I ended up getting it at 7, and I get out at $5.20. Okay, I made $1.81. So if I took my 142 shares times $1.81, I just made $258. Okay, this would be a $260 win. Now, I took half my shares out here, so it was only about $130, and then I re-entered them when it came back to test $7, and I took them back out down here, so I got another $130 win. I traded a different size than this, but I'm just using this scenario. Okay, let's say we did a $10,000 account, and $1,000 is your maximum trade size. Okay, now if you have a predetermined, you want to talk about making money. Now I don't want to get into this really, but I'm going to. Okay, you get a predetermined stop loss, and it's $1.75, and you're willing to hold tight to that stop loss. No ifs, ands, or buts. If it breaks the missed monthly pivot, which is the highest point I think this thing will go, if it decides that's not it, this thing is going to run today. We have runners. If it decides this thing is going to run today, right? This thing ran after hours, even farther, right? then you need a hard stop. So let's just say, okay, $1.75. I'm willing to lose up to $500. How many shares was that, right? So 500 bucks divided by $1.75. It says I could take 285 shares. So if I take 285 shares and I stop out, I hit my maximum, 5% of my account on a loss. Again, if you got an 80% win rate, you're making money. Yes, that loss sucks, but you're making money. You lost $500. Now, if you take 10 losses in a row, you're doing something wrong. That's a different issue. So let's say you took 285 shares, okay? And you made $1.81. You made $500. You made 5% account growth in one trade. This is a trade I took today, right? You can do this. I did it. In fact, I did it twice. So this is what realistic trading looks like. It's not thinking this is my trade plan to make $1,000 and let's hope I don't lose. No, you got to know where your loss is going to affect your account so that you can plan a win. Okay. And if you lost $500, whatever, 10 of these trades will come up all day long, right? These things happen every day, almost every day, most days. Okay. Does that, I really want that to make sense. You guys got to start. There's 10 of you in here, and I'm going to share this with everybody, like even the free people. Okay. You need to know where your limit is, because if you get into, I'm going to now look at TGL. I traded TGL today, and I took a little bit. I didn't take a bigger loss than I wanted to. I took a higher stop loss than my plan. Okay, and I played this thing all over the place. These are all my entries and exits. It's going to be fun to try to do a trade log on this. It's a 2-minute chart for whatever reason. Okay. So for me, okay, let's do up a trade plan. Okay. I started getting in at a halt. There's a whole different reason why I took this trade. And I even said when I took it, it was a risky trade. I took a really small trade size. There's my first account protection thing. Okay. I'm protecting my account by predetermining this is a split day. It's split today. And they usually run between, on average, 80%. Now this thing ran some ridiculous amount. Okay. But let's just make a trade plan. Okay, this thing is coming up. What do we got? Current monthly pivot. One of our main rules is we generally don't take entrances until we don't take an entry until it's above or at the current monthly pivot. So let's just say that was the trade plan for today. Again, I took a riskier trade for different reasons. Ignore that. Let's talk about an actual trade plan. Okay, there's a missed monthly pivot right here, which it took it out and struggled at. I figured this was also done, so I got back in. And guess what? I stopped it out, I got back in, and it stopped me out again. I didn't put my stop back out. I got to go look up what it was. Okay, I lost on this trade. This was a loss for me today. Now, what should I have lost as a proper trade plan? All right, again, let's just say I have a 10K account, which means my maximum loss is $500. I'm taking an entry, let's just say, just under the current monthly pivot. Current monthly pivot is 1430. Let's just say I take 1390, under the whole dollar. My max stop loss should be about $11. That's a pretty hard stop loss, because really that means I should take such a small trade size here that I can add up here. But let's just say I don't. Is it uncommon for it to go to miss monthly pivots? Not whatsoever. So now we may even determine this is too risky. I'm not going to take this unless it's up here. Okay, but let's just say, so $11.23. Okay, let's see if we can even make this math work. So if $500 is my maximum stop loss, divided by 1130, I can take 40 shares. You know what? That's just the name of the game. Are you going to make $1 million on 40 shares? No, you won't. So let's just say I can take 40 shares. Okay, and I take 40 shares. 40 shares stops out. I'm out $500. Okay, if this thing runs down from my entry, and comes back down to the 200 EMA, somewhere around here, and I made $6 a share. Then I got 40 shares times 650. I made 260 bucks. Right? It's a 2-to-1 risk reward. You have to determine whether that's what you want to do in this particular case, but it's also an 8-to-1 win to loss ratio normally, 8-to-2. Sorry. So you need to determine A, whether you want to take this trade, B, protect your account just in case. It was super unlikely this thing was going to go there, but you know what? It did. That's why we prepare for these. That's not a likely scenario, but it did it. That's why we got to prep for it. If you're still holding, maybe a little farther. Maybe I did. I got back in a couple times. This thing, I was in at 960. I was in at 11 again, out of the halt. And then I thought, okay, well, whatever, it's getting in here. So I took some more at 14. And then when it dipped $2, I'm like, okay, well, I'm going to take $2 profit. Took $2 profit. Got back in at 15 out of a halt. Dropped down another, halted again. I thought it was going to open up down here and get another $2. So I would have made $2 a share there. I got back in, would have taken $2 more a share there. Now, if I canceled that out, I was break even or at a little bit of profit. What did it do though? Ran against me. It took off. So I added at $20. So, you know, I ended up losing more on this than I should. But if you wait, if you don't predetermine where you want to stop out so that you never break this, which is should always be a percentage of this. That should be your max, right? Whatever it is. I suggest 5%. You do what you feel is right. You can do smaller if you want. That's no problem. It just means it's going to be a very consistent grind on your account to make money. Okay? That's what's going to happen. And I can show you in a second that it works. But this needs to happen. You need to determine how much it is. You need to determine the farthest you're willing to let this trade go that makes sense on the chart. And then you got to determine how many shares you're going to take. This one, great. You would have made, you know, $260. $260 weight is 2.5% growth on one trade. Unfortunately, today it didn't. You lost 5. You could have made 5 on this one, right? You would have made 2.5% on this one, or potentially 5 if you took the full size. Right? This is crucial. If you got to go back and watch this 5 times, do it. This is what's going to make your account go up at the end of the month instead of zigzag up and down, and you take a big loss and you're like, WTF, what did I do? Why did I do that? Don't ever let go of this. I've done it. I still do it sometimes. I'm kicking myself in the ass from time to time for not doing it. We all make some mistakes. You're not alone. I've made these mistakes. I'm not saying shame on you, you're an idiot, this is what I would have done. I've made these mistakes too. Learn from them. Make a plan. When they say trade your plan your trade and trade your plan, this is what we talk about. We don't talk about this enough in the live trading, and maybe I'll start. Maybe I need to start. I've been trying to determine my max stop loss, which I haven't done my max stop loss. I've just set a stop loss that made sense to me. Usually it's a key spot, and then it takes 7.5% above it. I've been using 7.5 because it seems to be the sweet spot for VW trades. I've just transferred it to the rest of my trades. Now, had I just stopped out at 7.5%, I'd have been out on this candle and I would have just left it alone. And I would have made that, but I lost a little bit more. No big deal. It took a really small trade size. I was willing to let it go to about 25 to 30 bucks. Well, it did, and I didn't like it, and I got out. So we all take losses. Make sure your losses don't kill your account. Okay? If you have questions, ask me. Hope this makes sense. I know I rambled on about it, but please go back and watch it again. If you can't determine, there's 2 different scenarios here. I'll even do a third SMX. Okay? This one's, let's go back on day 1. I took a loss on this. I took a reasonable loss. I stopped out on one account. I forgot to set my stop loss on the other account, and this is where I ended up stopping out. That's stupid, right? So do we make mistakes? Yes. Can it happen? Yes. I was sick. I traded 2 accounts. I took them both at the same entry, my green and my yellow line. The first one was 7.5%. The second one was, unfortunately, I got home and it was already gone up here. So I just gave it a chance the next morning and I stopped it out. And I'm glad I did. Look, glad I did. It's still up. This thing is still, look where it's gone. Look where it's gone. That's where it is right now. $303, $323. Look where it went. Basically 500. Hope was not a strategy here. But let's just say, let's go back. I'm going to do the last one because I know this video is getting long, but it's probably one of the most important videos that I have done in a long time. Okay, let's go back to day one. Another reverse split, right? I predicted it was going to go up. On November 18th, I said this thing was going to break this. This is the second time a reverse split has gone bonkers in a week, or basically a couple weeks. All right, let's go back. I determined this was my entry point, $8.71. Okay, I had a reason for that. That was where I wanted to get in. I took it. So, it wasn't the best reason, but it was my reason. What did I do? I determined that the high of day, okay, there's 7.5%. So I was in early, but I had decided I will hold this to 7.5% above high day because they will retest high of day. And it actually kind of tested it here, and I was gonna hold it. I think to be honest, that I actually took it here. It was at 1177, but anyway, because I had a predetermined. See, that was actually 1177. So let's just say I get in at 871. Let's just say 7.5% was my max stop loss. Okay, so again, I have a 10K account. $500 is my maximum stop loss. Okay, I determine from my entry. Don't ask me why my entry was here. I'm not going to look into it right now. To here was $3. Okay, so if I want to lose $500 divided by a $3 move, I can do 166 shares at 870. Okay, 166 shares times 870. It's $1,400. It's a little over. It's actually 14% of my account. So maybe I don't even need to go that big on a trade. But that's the maximum I would lose if I took that trade. If this went where I expected it to go, back to the 200 or the 200 SMA, I would have made that much money. Right? I would have made $500 because it's $3 in the other direction. $3 loss, you know, roughly $3. Let's say $250, right? That's trading a plan. It's making a plan and executing that plan the second that it happens. That's what's important, because this would have, I mean, for most people, let's just say I took that entry. Okay, how many shares did I say that was? 166. Let's just say I took that 166 shares. Okay. I'm just going to move this for a second. Let's say I took 166 shares. And let's say my loss that I actually took on my bigger account, okay, from 871 to $34, okay, was a $25 loss. So 166 times $25. I'd have blown half my account. Not 500, half my account. Like 40% of my account would have been gone right there if I didn't adhere to my stop loss. And on one of them, I didn't. But I traded a trade size that was relevant. It was fine. It was okay. I ended up taking, I think, that's what I think I took, a $4,000 loss on that. But it wasn't half my account. So there's a difference. So you do that once. Now you're trading with a $5,000 account or $6,000 account. And now your max stop loss is $300. So you've just crippled your trading ability by almost half, because you were just hoping, or you didn't set a stop, or you were whatever, distracted, dumb, in too much of a rush, hoping, you name the excuse, right? So that is a key lesson on how bad you could be on your account in one bad trade. Now, how many times? So if I would have made money on that, 166 shares, let's say it went to plan, okay? From here, let's say I went to the SMA, 200, we'll say $202.75. So $166 times 275 will be a little bit. So I would have made $500. I would have grown my account 5%. One trade, one successful trade. But I blew up my account by 50%, 40%, 41%. right? That is the difference between adhering to a stop loss. How many times could I take these losses and have it never amount to that? I can tell you about 10 times, really 8, right? I killed 8 losses, and Lord knows how many wins I would have had in between. Ideally, if I had 8 losses, I would have, 40 wins, right? So how much did I kill my account by not having a stop loss in place? That, I hope, is a realistic view on how important this is and why I would rather take this loss than this loss any day, because I can do this 10 times and still be in the trading game with a good size account continuing to grow. I can only do this twice and I'm folding, right? Hope that makes sense.